I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. We walked into this Wednesday session with a clear place signal from the RSI engine. This morning I told you the gates had swung wide open again, that the volatility compression we'd been tracking was still in control, that the big money was letting futures grind quietly, while the headlines screamed about crashes and surprises. And you know what? That's exactly how it played out. The day opened with a little wobble. Some of those fear-based voices from the overnight feeds tried to push the narrative that everything was breaking. But by midday, the tape had settled into that familiar, contained range we love. The VIX kept sliding lower, exactly as our system had been flagging for days now. Remember last Thursday when I said, watch how fast volatility bleeds once the real players stop pretending? Well, today was the latest chapter of that story. By the close, the fear gauge had dropped again. The S&P stayed right where disciplined traders expected it to stay. No fireworks. Just another day where patience collected its reward. You could almost hear the frustration in the financial media. All those crash headlines this morning, the ones claiming last targets reached and markets on the verge of collapse. They got it wrong again. The institutions didn't panic. They didn't chase. They simply let time do what time does in a normal contango environment. And that's why you are here. That's why we built this. Because while retail is reading those doom articles and clicking the panic button, we are executing a process that has been battle tested through every cycle. Let's talk about the traps that fired today, or more accurately, the traps that tried to fire and got exposed. First, there was the classic GDP headline trap, that surprise print this morning, the one Miss Vicky's team flagged at 11 o'clock. Markets initially flinched. Some retail accounts saw the number and immediately started selling. But here's what the big boys knew that retail missed. That print was already largely in the price. The improvement from the previous reading wasn't the disaster narrative being sold. It was just another data point in a fragile but functioning economy. The trap was set for emotional traders to sell the headline and buy the rumor later at higher prices. We see this playbook quarterly. Wall Street loves nothing more than a scared retail crowd, creating liquidity for their own quiet accumulation. Then there was the Fed meeting trap, with the two-day session wrapping up. The financial press spent all afternoon breathlessly analyzing every word. Would Powell hint at cuts? Would he sound hawkish on inflation? The headlines kept flipping between fear and relief, but our community didn't have to guess. We knew from the term structure, from the healthy spread between the VIX and its three-month cousin, that the market had this event well telegraphed. Contango like we saw today doesn't lie. It tells you the smart money expects volatility to stay contained near term. Yet retail kept piling into directional bets anyway. Some bought calls, expecting a melt-up. Others loaded puts thinking the sky was falling. Both sides got chopped up while our iron condors sat peacefully in the middle, exactly where the methodology placed them. And let's not forget the commodity distraction trap. Oil surged hard on Middle East positioning. Gold sold off sharply. Crypto took another leg lower. The financial channels ran with it all afternoon, connecting dots that weren't really connected. See, everything is breaking at once. But we know better. These are cross currents. They create noise. They create the illusion of chaos, so the establishment can harvest retail stops and options premium from both sides. Our tribe doesn't fall for it. We stay neutral. We stay process-driven. We remember that these traps exist because someone always profits when confusion reigns, and that someone is rarely the viewer at home watching cable. Now let's talk about what worked, what we learned, and why this particular Wednesday felt like validation for everything we've been teaching. Our iron condors, placed right in that 305 to 314 window, sat in the sweet spot from the moment they were deployed. The RSAI verified signals delivered again. They read the skew. They read the momentum. They read exactly where the market was willing to pay us to stay neutral. And the market obliged. It stayed inside the range all day. No breach, no drama. Just clean premium collection in an environment built for exactly this outcome. This morning I reminded you this was the second straight place signal, that the VIX compression story of the week was still intact, that institutions were quietly grinding higher while retail digested manufactured FOMC drama. Every bit of that played out. The methodology didn't just work today, it worked beautifully. Our community stuck to the gates. We didn't reach. We didn't get cute in that 15 to 20 caution zone. We let the math do what the math does when volatility declines and contango holds. And that's the lesson worth repeating. Discipline compounds. Emotional trading destroys. When the RSAI engine says place, and all entry gates pass, our job is simply to execute and then let time decay work its quiet magic. What surprised me most, and this is the unexpected retrospective observation, was how quickly the GDP headline faded from the tape. Usually macro surprises like that create more noise. Today, it was almost as if the market had been waiting for any excuse to prove the fear was overblown. That tells me the underlying bid is still there, that the patient money is still in control, that the fragility curve we talk about so often, where systems get more brittle the larger they grow, hasn't reached its breaking point yet. The big money knows this. They're positioned accordingly, and we're positioned with them, not against them. Zooming out to the bigger picture, this Wednesday closes out the first half of a very instructive week. Monday's setup, Tuesday's compression, today's confirmation. The week-to-date narrative arc is clear. Volatility continues to bleed lower, even as the calendar throws event risk at us. The 10-year yield stayed relatively stable. The dollar showed modest strength, but nothing alarming. Iran tensions remain background noise. Trade rhetoric normalized into its predictable rhythm. None of it was strong enough to reverse the VIX decline. This is exactly the environment where our iron condors thrive, where the VIX hedge vanguard methodology earns its keep without even breaking a sweat. The smart money isn't chasing home runs here. They're harvesting consistent income from range-bound action. They're letting contango work in their favor. They're keeping their ALVH layers active, all three of them standing guard, even though we didn't need them today. That's the beauty of the system. It's always on, always protecting, always ready for when the regime does eventually shift, because we know it will. They always do. But today was not that day. Today was a day that rewarded those who stayed neutral, who followed the RSA, who understood that boring telegraphed setups are often the most profitable ones. And tomorrow, we'll be ready. The Fed wraps with their press conference. That'll be the next number everyone obsesses over. We'll be watching whether the VIX tries to rebound off these lows or continues its slide. We'll be monitoring the EDR temporal reading, which has been telling us to stay in forward mode. We'll be checking if that healthy term structure holds or starts to flatten. Most importantly, we'll be watching whether the RSAI engine keeps those gates open for another place or starts flashing caution. Whatever it says, we will follow. No ego, no hope, just process. This midweek checkpoint leaves us in good shape. The week so far has validated the patience we've been preaching. Monday and Tuesday signals aged well. Today's trade followed the exact same logic. And that consistency? That's what separates us from the crowd getting chopped up out there. You can't talk to your family about this stuff. They don't understand. Your co-workers don't understand. But we do. We understand that real wealth is built through consistent discipline, not through chasing the narrative of the day. We understand that protecting capital first creates the foundation for everything else. We understand that when you have a methodology that reads the skew in real time, that adapts to the actual premium the market is offering, you don't need to predict direction. You just need to stay on the right side of probability. And that's why we built this community. So traders like you would have a place to come where the noise gets filtered out, where someone tells you the truth about how the game is really played, where you can execute alongside people who get it, people who celebrate the quiet wins, people who don't panic when the headlines scream. This is our tribe. This is our edge. And days like today remind us why we show up every single session. Be sure to listen for any breaking news from Miss Vicky. She'll keep you posted on anything that moves the needle intraday. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.